Hey everyone, it's PK here, and in this show or this episode, wherever you're listening on the podcast, Facebook group, or YouTube, I'm going to be talking about how you can catch up to this property market, how you can use lender's mortgage insurance to really make sure that you get into the market ASAP, try to start making money, start making passive income, start making capital growth, and stop missing out. Okay, so if you have very little deposit, if you have 20, 30, $40,000 of deposit, and you want to get on this wave, you want to get the show going, you want to invest in property, then this video will be super useful for you. My name's PK, and I help people build passive income by buying properties that have both positive cash flow and growth using data without having to fly around the country doing inspections and without dropping 15K on a buyer's agent. I don't know why people do that. So if this video brings you value, hit the like button. Please give it a thumbs up on YouTube, subscribe, notification, all that good stuff. Join my Facebook group. There's more than 8,000 people here, link below. Let's do it. Let's get into it. So let's go with the Olympics theme. I've been talking about a lot on these episodes in recent times about boom and bust, what the Olympics are going to do, particular hotspots. But this video is all about brass tacks, the mechanics of property investing on the theme of the Olympics. So you know how in gymnastics, I'm not a gymnast, I don't know what I'm talking about right now. But in gymnastics, how you kind of, you run, and then there's kind of like that vault, that's kind of springy bit, and then there's that vault, and then, the person, the male, the female gymnast, they jump off that and they do a few, 360s or flips or swirls or whatever, and then they land on the mat, in perfect posture. Lender's mortgage insurance is like that springboard. Lender's mortgage insurance is like that springboard, like that vault to help you get on to this property market. Now imagine that you're at a pier, you're right at the edge of the pier. In front of you there's water on the right hand side, on the left hand side of there's water, and there's one boat that's getting you from the edge of that pier where you are to your destination. A boat, ferry, call it what you want, but it's already going, right? It's not docked anymore. It's like 5 meters away. There's no way you can jump and get there. It's every second it's edging further and further away, and you're like, well, this is the last boat. For the next one, I have to wait maybe 5 years to get the next boat. I really need to get on this boat. Lender's mortgage insurance is like someone saying, all right, well, I'll bring you a springboard. I'll bring you a vault, and I'll put it right at the edge of that pier. You can take a bit of a run up, jump on that vault, on that springboard, and then allow it to catapult you 5 meters onto that moving boat so you don't miss it. Okay, and that is what lender's mortgage insurance is. So right now, the property market is like that boat. I know you guys, I speak to you, I feel those of you who have 20K, 30K, 40K saved up, you're like, these property prices are going bananas, they're going bonkers, I'm missing out, I'm on the sidelines, everyone else is making money except for me. Lender's mortgage insurance is like bringing you that springboard and allowing you to basically achieve or land on that boat that you otherwise couldn't have reached. So how does mortgage insurance work? Lender's mortgage insurance is basically an option, a facility by which you don't need to put down 20% deposit. If you're still thinking that you need to put down 20% deposit to buy investment properties, that is not true. You don't need to do that, and it's not foolhardy not to do that either. So look, this is how it works. If you pay more, if you get a loan of above 80%, let's say 85, 90, 95%, you need to pay the banks an additional amount of money Call it $2,000, call it $5,000, call it $10,000, depending on your loan size. If your loan is 200K, then it might be around 2 or 3K. If your loan is 500, 600K, then it might be more like 10K. But let's just go with like 400K as an example. So you want to buy a $400,000 property. Your lender's mortgage insurance is probably going to be around 5K or somewhere like that. Each bank is different. Every bank is different. But here's the thing, if you pay that money, then the bank is going to allow you to go up to an 88% LVR, or in other words, your total loan as a proportion of your purchase price, 88%, which is something I prefer, or even up to 90%, or even up to 95%, okay? So think about a $400,000 property, you've got $30,000 in the bank account or $40,000 in the bank account, and you're sort of thinking, well, to put down a 20% deposit, I need 80K. I can't come up with that. That's going to take me another year, and by which time that $400,000 property has gone up to 500. Real stories, right? This is happening. You know it. You're following the property market. You're seeing it happen. Right? So if you've only got 30, 40K, then what you can do is you can avail lender's mortgage insurance, and then the bank will say, all right, just put down 5%, just put down 10%, just put down 12%, and we'll cover the rest. Okay, and that way, yes, you've taken more loan. Like, no, I'm not going to beat around the bush. It's increased your loan amount. But here's the thing. If you've bought well, and it's not hard to, it's not easy, but it's not rocket science to buy well in this kind of market. The whole market's gone up 12, 13, 40% in the last 12 months, then that 400K property is going to become 500K, literally, like at least with my clients, like in less than 6 to 12 months, right? So if that is happening, you might as well get the additional loan. And now I know what you're thinking. You're like, well, I don't really want to be spending that additional $5,000 or whatever it is on lender's mortgage insurance. And here's the thing. You're not actually spending it. And this is what people don't realize. You're actually capitalizing it on the loan, right? So it's not like you have to pay $30,000 deposit and then an additional $5,000 in cash for the lender's mortgage insurance to the bank. No, that $5,000 lender's mortgage insurance is just added to the loan amount. So if the loan was, let's say, $360K, then now the loan becomes $365. And if, let's say, you're on interest only, or even principal interest, not a huge difference. Let's just say interest only. The incremental interest you're paying on a yearly basis because of a $5,000 extra loan is, like, I don't want to go as far as to like say it's a price of a cup of coffee a week, but like, it probably is, right? So the ability for you to get into the market, get a 300, 350, 400K property, now, as opposed to waiting 6 months by the time that boat has already gone and you can't afford that property anymore, like, it's a no-brainer, right? And the thing is that lender's mortgage insurance can be amortized. It can be written off in tax over 5 years' time, right? It can be written off. So not only are you not paying it, it's getting added to the loan amount, and the additional interest cost per week or per year is negligible, but it's also tax deductible. And if you do achieve that $100,000 capital gain, or 50 or 150K, let's say in a year's time, and you refinance, at the point at which you refinance that loan to, let's say it goes from 400K to 500K, and you take out $50,000 as equity, you go to the bank and say, hey, bank, my property's gone up, give me 50 grand, give me half of that as my second deposit for my second investment property. Then at the point at which you refinance, your entire LMI, lender's mortgage insurance, becomes tax deductible. So it's not actually over 5 years in that case, it's all tax deductible in one go. So that year you have a pretty good tax windfall or tax rebate windfall. So you can start to see like the pros, like, do start to stack up. And so, like, oftentimes I get asked this question, hey PK, what's the minimum I need to invest in property? And I said it 2 years ago, I said it last year, I'll say it again, around $30,000 to $40,000. And you might be thinking, a lot of you guys, most of you guys that watch me, you're living in Sydney and Melbourne. Most of the people that watch me, you guys are between the ages of 25 to about 45 or about 40. You're sort of thinking, all right, well, in Sydney and Melbourne, mate, like, I don't know what planet you're living on, but you can't buy anything in $30,000 or $40,000 deposit. Well, I'm not saying to buy in Sydney, Melbourne. You can To buy a positive cash flow, high growth property, I'll do a different video on why you don't need to make a trade-off, but to buy positive cash flow plus high growth property in places like Perth, and places like Adelaide, and places like Brisbane, and places like big regional cities, you don't need more than $30,000 to $40,000 to buy a solid, high growth, positive cash flow property. That is the reality. Anyone who tells you any different doesn't know what they're talking about, or they're trying to sell you a brand new property, and the brand new property costs at least $600,000, so they say, oh, you need at least $70,000, $80,000. It's not true. With lenders mortgage insurance, you can go right to the end of the pier, you can get that springboard, you can get that vault, and you can catapult yourself onto a moving property market, the boat that otherwise you had no chance of catching. And the thing is, guys, that if you don't want to buy lender's mortgage insurance, especially in a market like this, then what you're seeing is that boat go further and further and further and further away, out into the distance, fading into the horizon, just like your aspirations to build passive income. All right? That is the perfect analogy. It's true. It's true, right? Like, if you're not able to save money as fast as the property market is increasing in value every single month, every single year, then your aspirations to build a property portfolio are just getting further and further and further away. Like the suburbs that we're investing in, like I'll give one suburb away right now. Like, we were investing very heavily in a place like Devonport, let's say 2 years ago, and now Devonport's gone up like 40% since that time. And that in the Devonport context is like $100,000. So if you're able to save $100,000 in a year, in 18 months, in 2 years, then you might say, okay, well, I wasn't sure about Devonport, and fine. And it's fine, because Devonport's gone up $100,000, your savings has gone up $100,000. Right? But if you're not able to save $100,000 in a year or two, then buying in Devonport using lender's mortgage insurance was a good idea. So it's the same analogy, guys. If you're not able to keep up with the times, if you're not able to save as fast as the property market is increasing, and unless you're on 400, 500, 600K, like, you're not going to be able to. That's how quick the velocity of the real estate market is right now. Then you need to jump on. You need to jump on that boat. And if you're thinking you don't have enough money, then you have to use lender's mortgage insurance. I think I've waffled on enough. I think I've made the point. Yes, it costs money, but it's added on to the loan. It's tax deductible. It's just a no-brainer. This is advanced property investing. People who don't know how to make money, those are the people that don't get into good debt. Those are the people that count their, pennies. Those are the people that can't see the forest from the trees. Don't be that person. Get rich slowly, not for the purpose of getting rich, but from the purpose of alleviating financial stress. Understand financial literacy, lender's mortgage insurance, brass tacks of property investing, fundamental. Let me know if this was useful. Let me know what next video I should produce in the comments. Thank you so much for watching, guys. I'm always grateful for my community. There's more than 8,000 people on Facebook, my YouTube community, which is growing so quickly. I've started a podcast as well. I'll leave that in the links at some point. I don't know when. I'll have to get around to it. But I'm really grateful to each and every one of you. Every day I get like 10, 12 DMs, people thanking me. I really want to thank you for the ability and the opportunity to serve you and make a difference. I know something about property investing, and if I can share it, then that gives me a lot of satisfaction. All right, guys, best of luck. My name's PK, and all the best. Bye.